And remember, we said that the cash book in public sector, it's no difference with the one in the private sector, because we saw that we debit the receipts and we credit the payments. And again, we saw that the cash book has two sides. It has the debit side. It has the debit side and the credit side, and it has the cash and bank on both sides. So the debit represent the money in and the credit represent the money out. Now, I have shared all these notes for the public sector accounting from topic 1 to the last topic. So you have all the notes. Ensure that you save them somewhere so that as we continue, you are able to make much of what you are discussing. So today I want us to look at the second set of books of account, and this is what we normally call these are the annual accounts. Now, when you talk about the annual accounts, for those of us who are accountants in this platform, you are going to appreciate that. Just try to. So you appreciate that the financial statement in a private sector, it has 4 main statements. So there is the profit and loss account, there is the balance sheet, there is a statement of cash flow, and there is a statement of changes in equity. Now, when it comes to the government, so these are the books that are normally maintained. And these are the books that are normally audited by the Auditor General. So when you get to hear that the Auditor General comment that a particular entity, let's say, for example, the Nairobi County. So the Nairobi County, they got a qualified report. Yeah, it means that the state of affair of the book of account do not represent the true and the fair view of the state of the account. And it was very embarrassing the other day, I think it was last year, when our able governor went live on television with Jeff Koinange, and he was happy to say that for the first time, the Nairobi County got a qualified report. You know, he don't understand that qualified means bad. Qualified means that report does not make sense to an auditor, does not make sense to an accountant. Those books have not been prepared in accordance to the IPSAS. Yeah. An unqualified report or an unqualified opinion is the one that shows that the book represents the true and fair view state of accounts. Unqualified means the books have not been prepared, or the book do not represent the true and the fair view of the accounts. Then we have other opinion like the modified. Then we have the exception of opinion. And I want to believe that if you're an accountant and you have done the unit called audit and assurance, you might have come across some of those items. Now, the books that are normally kept by the government, first we have the income and expenditure account, and this is very simple. For those who have done accounting, again, you did something called specialized accounting, and especially for NGOs. So they normally use this income and expenditure account. Then you have the statement of assets and liability. Then we have the general account of votes. Then you have the exchequer. We have the pay general account, PMG. We have the appropriation accounts, and then we have the revenue account. So these are the main accounts that are normally kept by the government department. So we are going to look at each and every account, and we are going to have worked examples, and we are going to also have some assignment at the end of every presentation. And I have not seen, there are some students who have not shared their assignment for public sector. I have received a few, so please ensure that you do your part so that you avoid issues of missing mark. Now, the income and expenditure. So this is very similar to what we normally see in the non-profit making organization. It is however prepared by government unit which provide commercial services, e.g. staff canteen or student welfare. So now the income and expenditure, they are not prepared by all the government departments. So for example, if you go to barracks, let's say barracks or Angata barracks or Nyanyuki barracks or whichever barracks, it's a mess. The mess there, or is the what we normally call the staff canteen. So those canteen are the one who maintain this income and expenditure account. Even the one at Chuka University, I believe there is a student canteen at the university. So that canteen should provide the income and expenditure account. Now, this is an example. The following account balance were extracted from the books of a pension fund for the year ended until June 1997. So we have payment to the members, 500. So now, when you are analyzing a statement like this one, as you read this statement, what you should be able to do, or what you should have at the back of your mind, it is the classification. For example, if you get to hear payment to the members, you ask yourself, is this an income or an expense? So definitely this is an expense. Then the other one is member contribution. Member contribution, this is an income because it's the member who are contributing, so the pension fund gets some income. Payment for management expenses, that's an expense. Interest on investment by the fund, that's an income. Fund account, so this is the balance, fund account balance. Then we have cash balances from the paymaster general, 2 million, and then the amount balances. Now, you are required to prepare an income and expenditure account for the year ended until June 1987 and balance sheet as of that date. So, what we have said is that you need to be able to classify items of, in this particular question, there are items which belong to the income and expenditure account, and there are those ones which belong to the balance sheet. So that is the first test that you should be aware of. Like this one here, fund account, this is a balance sheet account. Cash balances, these are a balance sheet account. Investment account, they are balance sheet account. But anything to do with income, anything to do with expense, that is an income and expenditure account. So I have done this as a worked example. So the first statement is the income and expenditure account. So you can see we have members contribution, which is 800,000. Members contribution, if you go back to the question, this is the members contribution, 800,000. Then we have the interest income from investment, 400,000. So if again we go back here, we are going to provide this one, interest on investment, 400,000. These are the investments that, for example, if it's a pension fund, they can buy treasury bill and treasury board. That is the investment that we are talking about. Yeah, so that is 400. Then there is no other income. If you look at this question, there is no other income, so the rest are expenses. So you can simply add up and get the total income. So from the payment side, we have the payment to the members, have 1 million. It is this one here, payment to the members. Then there was expenses of management. So the management expense was 150, and it is this one here, 150. Get the total. the total of the income, the total of the expenditure, the difference. So this difference, it can either be a surplus or a deficit. And a deficit will happen when the expenses are more than the income. And a surplus will happen when income are more than the expenses. So in this case, the income are more than the expenses, and the resultant figure is the surplus. Just add someone here. Now, the next part, it is the balance sheet. And I say that it is very critical for you to understand which item goes to the balance sheet and which item goes to the P&L. So we have investment account. Investment account, this is the money that has already been invested. It's an asset. You know, if, for example, you have invested in treasury bill, so this pension fund, they have invested in treasury bill, let's say the government board. The amount that they have invested, it is an asset. So you record investment account as an asset. Then, and it is on here, the 2 million. Then there is this, the cash balance, 350. You bring the cash balance here, 350, and the amount you get there, you sum up because there's no other asset. Then we have the FAD account balance brought forward. So this is the amount that was brought forward from the previous period. There's that. Then we have the surplus from the income and expenditure account, which is 550, and the two should be balanced. So in the event that you are given this kind of a question, and you find that if you put this 550 that you found here as a surplus down here, and the figure do not balance, then you know you have already made some mistake. So do you have anyone with a question regarding this income an expenditure account? On the question. Okay, so now the next one, it's a more elaborate question, and this is the exam third question. This is what you would expect in an exam. This is what you would expect in an exam. Actually, it is what you are going to expect in an exam. I'll bring this kind of a question. So let us go through this question, and then we look at the worked example. So the director of a parastatal, NEMA Limited, presented the following income statement for the year ended 31st December 2012. And I am hoping that I'm still audible and you can still see my screen. Can somebody verify that I'm still audible and you can still see my screen? Veronica, am I still audible?
You are audible and we can see the screen.
Thank you. So the director of a parastatal, NEMA Limited, presented the following income statement for the year ended 31st December 2012. We have accumulated fund 2.5, surplus, this accumulated fund is 25 million. Then we have surplus 2.5, license 12 million, staff cost 4.2, utility payment, we have maintenance, all that. Then we have additional information. So this additional information is always very important because it's going to help you to respond to the question. So we have the depreciate vehicle and building at 5% per annum. So in your working, what I would expect is that this first one, you come and look at the building and motor vehicle. Then you depreciate at 5%. So that will be, if it's building, it is 2 million times 5% because it's per annum. Then you come and take a motor vehicle, you get 3 million again times 5%. So you get that. So that way you'll be able to get and that's the working. So you'll be able to get the depreciation for motor vehicle and the depreciation for building. Then we are told that the stationery paid in advance amounted to Kenya shillings 20 million. So this is a prepayment. So you need to come here again. You look at the stationery. So we have stationery of 150. So out of 150, 20 has already been paid. So this 20, so for the P&L, you'll have to deduct what has been paid. So you're going to get an expense of 150 minus 20 because this 20 will go to the balance sheet because it's a prepayment. From the double entry, you realize or you appreciate that how we normally post the prepayment. We normally debit the prepaid expense and we credit the cash of bank because we are the one who has already who has made that prepayment. Then we have the utilities due 5,000. Then you need to also to come here to the utility payment. So this utility due amounted. This is the amount that we have not paid. So if you have not paid, now it is the opposite of the prepayment. So we need to accrue that amount, and therefore that amount is going to increase the utility payments. So it is this 50,000. Then you add the 5,000. A new act of parliament issued the elected new rates. By the end of the year, the company received a check over 10 million, which has not been recorded. So again, there is a 10 million which has been received. So this 10 million which has been received and has not been recorded, again, this is an income. So you need to analyze this additional information. Make sure you analyze one by one and the implication it has on these are the item on the trial balance. It's called trial balance. So understand this additional information, what they mean, or do they have any implication on the trial balance. Then what are you required? So you are required income and expenditure statement and a statement of financial position of NEMA as at 31st December 2017. And that is a 20-mark question. So let us look at the suggested solution. Now, the suggested solution, the income, as we saw, we have the income from license, 12 million. So let's just go back here. And I hope that because you have the slide, you're able also to work with me, maybe opening your slide and moving with me to see where the numbers are coming from. So we have the license, which is 12 million, and it is this one here. Always, because we are dealing with income and expenditure, always start with the income. So license is 12 million, that one there. Then we have the surplus, it is 2.5. Then we have the new check that I've just talked about, which is 10 million. And this gives you a total income of 24 million and half a million. That's the total income. So let us look at the expenditure. The staff cost 4.2. So the staff cost 4.2, it is this one here, no adjustment. And then we have the utility payment, 50K. The utility payment is this one here, 50K here. Then we have the maintenance, 200,000. Maintenance is here, 200,000. Then we have the stationery, it is 130. So the 130 is this 200 minus the prepayment of 20,000. You get 130. Then you have the utility due, which is 5,000. So this is what I was saying. This utility due, you should have added this one to become 55. So this utility due, because we normally say that if something is due, you need to accrue. So ideally, what should have happened is that we should have added directly 50,000 plus 5,000 to give 55. The way we have done for stationery, we have just deducted direct. Then I say that we do the depreciation for motor vehicle. We have been given the rate. The rate for depreciation is 5%. So if you get 5% times 3 million, you're going to get 150. And if you get 5%, you multiply by the building. The building is 20 million. I'm sure you are going to get 1 million. So then you get the total expenditure, which is this amount here. Then get the surplus or deficit for the year. So this one you get it by deducting the total income minus the total expenditure. Then you need to get this amount here. That's the amount that you are going to get, 18,715,000. Okay, so now the other one is now the statement of financial position as at 31st December. So now for the financial position, remember you normally start with the assets. So you start with the asset, the building, it is 19 million because we have 1 million for depreciation. Remember, we normally record asset in terms of net. Net means it is cost minus depreciation. Motor vehicle, again, which was 3 million, but we had a depreciation of 150, you get that. Then we have land and commission, 3.5. This is land and commission here. Land and commission, so you have 3 million and this amount here. So I think there is a complete reversal error here because we should not have this kind of a scenario here. We should not have this one here. So I believe there is a complete reversal error. So, but we have now the land and building as 3.5. Where am I? Yeah, here land and building 3.5. Then we have the current account. We have the bank 9.3. That is given verbatim, 9.3 for bank. This is one here. Then we have prepaid stationery. Remember I said prepayment is an asset. You have paid some money in advance for service that you have not received. So it's an asset, you bring it there. Then utility due, it means you have not paid for this expense. It is a liability, you bring it here. Accumulated funds, 25 million. So this accumulated fund are this one that they have been given here. These are the accumulated funds. Then we have the surplus for the year, 18,715, and this figure you get it from the income and expenditure account, that one there, that one there. So the total liability and equity, so these two figures again should balance. So that is how we go about the income and expenditure account and the statement of financial position. And I have said that because this is adult education, it's a postgraduate, I'm going to bring that question in that form, the way exactly it is there. So please take time to internalize and understand it so that you don't have to just struggle at the end of the day. And to affirm that you have understood, so there is this question. It's an open book question. Do it in form of an assignment, and maybe you can submit the earliest time possible. And in the event that you struggle on any item, you are free to into my DM and request for clarification. Otherwise, that brings us to the end of that short presentation, but very impactful because it carries 20 marks. So now I'm going to open the floor for us to have some reaction before we proceed to the next segment. So I'm going to give us like the next 4 minutes to listen to us. A question, a comment, a clarification, something that you have not gotten clearly. That is what I'm expecting at this time. Anyone? So have you understood? Veronica, si uongelee hawa wenzako.
Mwalimu, I think it's clear. We
Mhm.
only need to go through it again.
Mhm.
And as we try the assignment,
Mhm.
we will be able to internalize and be good in it.
Okay.
However, I have some 2 people who are unable to log in.
Mhm.
They're saying that the link is not working on their side.
So I have shared the link.
Okay.
Yeah. So if they are still unable to log in, then it means they might be the problem, not ourselves, because I think majority of us are already in. But I have shared the link just in case. Okay. So now that is that. So I want to fade here. So I want to go to, let me just see this one here. JV. So I want us to look at the revenue account. This is not the GV, this should be the revenue account. So now we have said that the government departments or government unit normally maintain some several account. So we have this account called the revenue account, and this revenue account, this records the estimated revenues and the actual revenues from each particular revenue source for the government unit. So there is the word, note the word estimated revenue and the word actual revenue. So that is what this account record: estimated revenue and the actual revenue. And this revenue, they are from various sources of government unit. Now, this actual and estimated, sometimes it normally results to difference of what we call the variance. And when we have this variance between what is estimated and the actual, the accountant is mandated to explain the difference of the two. And in some cases, you find that that difference is normally corrected in the future. So it can be corrected in the current period, but it's corrected in the same period. And now you're going to see an example. So the following are an extract from the trial balance for revenue head number. So for those who work in government, I know you know what this revenue head means. These are the folio accounts. So that's the revenue head number. So we have, these are the airport revenue collection for the year ended until June 1998. So we have this revenue code. Yes.
Yes, I think your screen has dropped. I can't see it from my end.
So is there anyone else who cannot see?
Yes, Mwalimu.
You can
I
see.
thought it's mine.
Okay.
It's now up.
Okay, good enough. So okay, apologies for that. So I'll just repeat again. So I've just said that we have just done the income and expenditure account. But remember, we said that there are several accounts which are normally maintained by the government department. So one of it was income and expenditure. So right now we are doing the revenue account. And from the revenue account perspective, the key thing is that this account normally record the estimated revenue and the actual revenue from each particular revenue source for the government unit. Then the other concept is that the difference between the estimated and the actual is normally explained by the accountant. But in some circumstance, instead of the accountant explaining, that amount is collected in the future, estimated by the government unit. So the most important thing, it is actually to know how to do this practically. Now, we have this example here. The following are the extract from the trial balance for the revenue heading number 180 to 240, airport revenue collection for the year ended until June 1998. So we have this code here, renting, building, and equipment, that's an income, renting from land, aviation, airport, etc. Yeah. So this we have now. These are the collections. So then we have these are the actual collections. Then we have the following additional details are made available. Balance in hand as at 30th June. We have that balance there. Estimated receipts. These are the estimates now. Then we are required to do a statement of revenue for the year ended 30th June 1996. This one I think should be 1990, not 1986. It's a typo there. But the key thing is that you need to differentiate which are the actual revenue and which are the estimated revenue. So we have said these are the actual and these are the estimated receipt. The estimated is what you're expecting to receive. And I'm very sure for those of us who have interacted with the budget, you normally do the budget in terms of estimate. What are you expecting to receive by, let's say, like now we are doing the budget for the year 2026. So what are you expecting to receive by that particular year, the year 2026? What are you expecting to receive in terms of income? Yeah, and again, for those who are accountant, you appreciate the fact that after every month, you normally do the variance between what you budgeted and the actual income, the actual expense, and even for the capex. Now, these are the you have said these are the actuals, and these are the expected. So the next phase, we need now to work on the statement. Okay. Then just a minute. Okay, now, so now let us just prepare this statement here. So the first thing you need to do is to open with the now this is the format. So we have the code. These are the code that you have been talking about. This code here. So you start with those code there. Then you have the details. So the details is now the individual budget line. Then we have the estimated revenue or the estimated receipt that we have just discussed. Then we have the actuals. These are the actuals. Then we have the variances. Now, let us start with the first one, the balance brought down. So in this question, we have been told that balance in hand as at 30th, balance in hand as at 30th June is this amount here. So this is the amount that you are going to start with. Balance brought down from the previous period. So this is the revenue that we had in the previous period. So we are going to start with that one there. Then we are going now to, these are now the, we listed the estimate for each code and the actual for each code. So let us start with the first code here. This is the actual. The actual for renting, building, and equipment is 807, but the estimate for the same code is, remember this code here, this code here. So the code here is the amount here is 1 million. So the estimate is 1 million. Actual is 807. We have unfavorable variance because it is negative. Then rent from land. So again, we look at the rent from land here. Rent from land, this code here, this is 2.5 million. This is 3.7. Again, you come and record. So we estimated to receive this, but we received this. So this is a favorable variance. For aviation landing fee, we estimated to receive 3 million. We have received 3.5. Again, that's a favorable variance. Air passage tax, we expected to receive 3.6. We have received 3.9. Again, favorable variance there. Other airport receipts, we estimated to receive 1.1. We have received 798. That's unfavorable variance. Now, we don't have any other code. So the last code is 670, and you can see the code for actual and the code for estimate are the same. So 670 is the last code, and we don't have any other information. So let us just balance. So we get a total receipt here, the estimated. If you add this, you're going to get this. Actuals, you're going to get this. So this actual, it is minus this 2.5. Yeah. So the actual, it is from 807, blah blah. Those are the makeup. I don't know whether I can be able to where is this color now? Oh, yeah. Yeah, those are the sum. So you add those ones, you're going to get 12 million. Add this one, yeah. If you add that one there, you're going to get 11. So, and then we have these are the variances that we have on this other end. These are the variances. So then you add another, then you have what? Total revenue available. Total revenue available will be the opening balance. So this the one that we opened with from the previous period, plus now this. So the total revenue will now be the will be 2.5, and this one here 12 million to give you 15 million. Yeah. So that is the total revenue available. Then there's this amount here that you are told that payment of revenue to exchequer. So there's amount that has been paid to the exchequer. Yeah. So remember the exchequer. This is the account that maintain the government payment and the receipt. So less payment from the exchequer is 13 million here. We are going to look at exchequer as an individual account, and you are going to understand how it works separately. So less payment to the exchequer, 13 million. So the balance that is left in this account is 2.2. So this is the payment that this amount was paid to the exchequer, and therefore this particular government department is crossing with this balance there. That is how we normally prepare the revenue account. Kuna mtu ako na swali kwa hiyo? Question from that one? Okay, so let's proceed. So we have another example here. Here's another example. So again, in this example, we are still going to use the same approach. So we have been given the estimated revenue and the actual revenue. Then we don't have any, we have some additional information. Now, most of the students, they normally get some of this question long because of this additional information. Always make sure you read this additional information so that you can be able to adjust where necessary. For example, a supplementary estimate we are passed during the year indicating one, reduction of revenue, reduction of 80 million on drilling license. So if you look at the drilling license, so drilling license, the estimated was 18. And then here we are told that reduction, so the estimate was reduced by 80 million. You know, all those dollars, the $8,000. So that means this 18, you are going to less 8, you are left with 10. That is the importance of that additional information. And now you should, even before you start answering, you should start with working there. So number one, you say adjustment of drilling license, estimated revenue, 18 million, 18,000 minus 8, you get 10. And then the next one, reduction of 3.2 of miscellaneous license. So you come here, get the miscellaneous license. The miscellaneous license were 9.2, again less 3.2, right? And then we had an addition of 340 on motor vehicle license due to amendment to the act. So that's an addition. So motor vehicle, we had expected to receive 94, but we are going to add 340 because this one was amended upward. I think there's someone who wants to join. Okay. All right. Yeah. So then we have the case of the amount paid. The amount paid to the exchequer during the year was 1.2. So again, these are the exchequer, the government department. Sometimes they pay to the government, or they remit some money to the government. So this is the money that was remitted to the government, 1.2. Then which the balance carried forward to June was 1.2. So the balance brought down was 1.2. Cash in transit and with agent was that and that respectively. Oil drilling revenue in arrear at the end was as follows. For the current year, 100 million. For the past year, 6. Outstanding for more than 2 years, we have 1.3. So you are required to prepare a revenue statement. So now, when you're preparing this revenue statement, you prepare in mind with the adjustment that you have made. So again, you draw the same column that we do last time. So you have the estimated revenue. This is ready for adjustment. You can either decide to do the working separately, or you can also decide to bring them into the same table. Then we have the actual revenue. So we saw motor vehicle was 94, but we had a supplementary estimate of 340, which was an addition to give that amount there. The actual revenue was 420. So if you look at the actual revenue here was 420. So for this example, I omitted the variance. So always ensure that we have the column. We have the estimated revenue, actual, and the variance. So this one I didn't include the variance, but always ensure that you include it. Then we have the other one, which is cattle trader license, that amount there. This was the actual. Registration of bank license, that is estimated, that is the actual. Scrap metal license, 3.6, and 4 and 400 and 4,000, and that is where this scrap metal, yeah, 3.6 and 4, those ones there. Then we have the oil drilling, the one that I told you, we adjusted with 8 to get 10. The actual was 4. Miscellaneous 9.2, we adjusted with 3.2 to get 6. The actual was 1. Then you have the total revenue, adding this to give you 1.4. Add this to give you 1.3. Then we are told in this question the balance that was carried forward was 1264. And this is the balance that we are carrying forward, 1264. The cash balance brought forward was 1264. 1264. Now, typically this balance should be on the actual. It should not be brought here, but there's no harm even in bringing it here. So the cash balance brought forward was this is the 2.6. It's the addition of the total revenue plus what we have to get 2.6. This is get 2.5. Then we have the amount that was paid to the exchequer. Remember, we are told here there's some amount that was remitted to the government, 1.2. This 1.2 was taken to the government, and you less. So 2.6 minus 1.2, you get the balances as at end of the June. Here you less, you get that. So if you are running the variance here, you'll appreciate that we are going to have unfavorable variance because the estimate is more than the actual. Yeah. So again, that is how we should work on that question. Remember, the difference between this question and the previous question is that here we have already been given the balance brought, the balance carried forward we have already been given. So the other question we had only been given this. So again here, this is an exam style question. I want to encourage us to try to look at it in case it show up in the exam, we not struggle. So I think lesson 4 and 5, I can comfortably say they are done and dusted, unless we have anyone with a particular question. Faith, you have a question?
Yes, Mwalimu, just for clarification, on when calculating the budget variance, I've seen different people do it differently. Some say estimated estimate figures minus the actual, and others do actual minus the estimate. Which is the most ideal way?
There's no ideal way, because at the end of the day, you're either going to get either favorable or unfavorable. But I prefer starting, because in most estimates are normally higher than the actuals. So it's always good to start with the estimates, then you go to actual.
Okay, so you say the estimate minus the actual.
Yes, that is the best way. It is the most ideal way.
Okay.
Thank you, Faith, for that, and thank you for looking at that question ahead of us.
Okay.
So anyone with a comment or a question or a clarification? Okay, so I'll leave it to you as a challenge. So there are two questions. So the one for income and expenditure, and then we have this one. So kindly do the two questions and submit. And in the event that there's a place that you need a clarification, my number are always open. Yeah, and especially at the working hours. Now, that brings us to the end of the public sector segment. Unless there's anyone with a question, I want to close it. I want to close that particular segment. Kuna mtu ako na swali? Brian, what do you want to say? Brian, you have nothing to say. Jonathan?
Mwalimu,
Mm-hmm.
I have a request. Would you please share an extra topic for me?
Share what?
An extra topic
Of what?
of the assignment.
I don't understand. Come again.
Hold on, let me confirm and I'll reach out.
Come again. Sharon, I don't understand your request. You're saying I share an extra topic.
Yes.
I've shared two. The one for income and expenditure.
Yes.
There's a question there for income and expenditure. And the question that I have shared, I say that's an exam style question.
Yes.
Yeah. Then I have shared the one for revenue, and I've said that's again that assignment is an exam style question. Okay.
Yes.
Yeah. So and just to advise us, I don't like having my postgraduate student to deliver so much. You already did this in your undergraduate. So whatever I give you, just go and, if it's an assignment, just go and do that assignment. Just go and do that. Just read the note diligently. You don't need to go and spend so much time in the library. Just read whatever I have given you, the assignments, the notes, and all will be well. Sawa sawa. Veronica, you want to say something?
No, mwalimu, I'm okay.
Hawa wanaume mbona wamenyamaza hivi? Ian, you want to say something?
No. Today I have nothing to say, Daktari.
Mbona mnaniangusha bana hivyo bwana? No, it's only they who are talking. Sio ni baya. And how comes that there are several already who are taking postgraduate than men? I'm not complaining. I'm not saying it is bad. So maybe that's why they are chickened in. Brian.
Yes, daktari.
Hata unaweza niambia, why is it that from this class there are very many ladies than men? Is there a problem around Chuka? Mlima mko na shida? Ama kuna shida gani pande hiyo?
Mwalimu, hakuna shida, it's because of women empowerment which has left boy child behind. Even from my end, we are supposed to recruit 80% women, 20% boy child in our programs.
Serious?
Yes. So it is happening.
But I thought we said that what a man can do, a woman can do better. Jonathan.
Absolutely. They are highly favored.
Yeah?
Women are highly favored than men nowadays.
So it means men must wake up. But now the question is, are the men ready for these girls? That's why that's why there is a very high rate of divorce, right? Caroline, do you think women being empowered is causing the rise in divorce?
Yeah, sure.
Who have a different opinion? Faith, would you support Caroline on that?
Yeah.
the women empowerment.
I think as women, we've learned we can do it. So there is an awakening.
It's an awakening, Faith.
Yeah.
But you see,
I think it's more better to empower.
Yeah. Ian, you're saying?
I think it's more better to empower men because once men are empowered, they can be able to feed the society more than women.
Yeah. Yeah, I don't know how many women here can support their husband when your husband loses a job. Yeah. Caroline, you're saying what?
I don't agree with what Ian is saying.
But you see now the challenge. I've seen it. You see, if a man loses a job, you know the chances of a woman feeding that man for the rest of their life is very hard. But a man will employ an employed woman and support that woman to the end. Is that not so?
Nowadays, it happens on rare occasions.
What rare occasion? A woman supporting a man?
You see, in the scenario whereby all women were unemployed, the society would still be the same. Will still be the way it is. But in a society whereby most men are not employed, it becomes now the opposite of that. Yeah. Because no woman is ready to feed a man. And then men are not being prepared for the empowered women.
Ian, were you surprised? Were you surprised when this girl for Digger said that the partner is Mollis? Were you surprised?
No.
Why not? Who was surprised? Brian, were you surprised? Brian, tuko naye kweli leo?
Yes, niko daktari.
Were you surprised about that?
No.
Why not? Because it's the same concept of the empowerment. I just wanted us to have a small break, and that is the break that we're just looking at that contemporary issue. So now, Caroline, can you guide us on, no, it's Veronica, my class rep. Can you guide us on how we are going through the presentation? We want to spend the next 30 minutes, so we are going to allocate at least 1 or 2 minutes to each one of us to do the presentation. Veronica, can you guide us?
Mwalimu, I think all of us have done it. That is my thinking. And if you're giving us 2 to 5 minutes, we are around 14. So that one will take, if it's 5 minutes, it will take almost an hour. So if you're given a chance to present, just be brief, go straight to your points so that all of us can have a chance of presenting. So I think we pick randomly from the list that I shared. Yes. So that everybody will have an equal chance of participating.
Sure.
All right.
Thank you for the guidance. So we said that all what you need to do, mention the topic. In the topic, just tell us. So in the topic, so you can write something down. So topic, that's the first thing. Tell us on the topic, which is your independent variable and the dependent variable. Then the second thing, go straight to the motivation. Tell us what motivated you to do the study. Tell us your statement. Then tell us, jump the theories, go to the conceptual framework. If you have the visual conceptual framework, please show us. Then from the conceptual framework, go to the chapter 3, the research methodology. Tell us your research design. Tell us your population. Tell us your sample. Tell us your data collection method. And if you have the regression, tell us. And the regression is part of the data analysis. And then I have forgotten for the topic, these two variables, tell us anywhere how you are going to measure. How you are going to measure the variables. So is that clear? All of us. So let us try to spend at the most 2 minutes. So don't give us much information, don't explain, just mention as we proceed. So I want to start with Migot. Migot, please open your mic and then you can take us through your presentation.
Hello, good evening, class. My research proposal topic will be based on the issuance of the feasibility of issuance of bonds in county government. So for
You
my
can
case,
present. You can present.
Okay. Just a moment.
None of us, let us ensure that our presentation is ready so that we can move faster.
Okay, can I skip and come after someone present as I prepare mine? The slides at the moment.
Faith, then you can, Faith, as you wait for me, God, Faith, let's proceed.
Mwalimu, would you mind projecting for me mine? I had sent you, I don't know. No, that's not mine.
Who is this? My God, you're done presenting.
Okay, I can continue if you can allow me, kindly.
Okay, please continue.
So mine will be based on the feasibility of municipal bond issuance by county government. For my case, the study will be based on Homa Bay County. So as we all know that most of the county governments are lagging behind when it comes to funding for example, infrastructure projects and other service deliveries. This is because of the funding shortcomings from the national government. So in order to maybe cover for this gap, I wanted to do a study whereby the county will be issuing bonds, and these bonds will lead to them getting now the finances to continue running the activities. So according to the Kenyan Constitution 2010, it was established that devolution, it was established that equitable resource distribution was supposed to be there among the 47 counties. And as we all know that despite this, most of these counties are averaging at 85% of debts, causing fiscal rigidity and project delays. This is as per 2012 PFM Act. So the study will explore on the potential of Homa Bay County being a pioneer in terms of issuance of bonds. So when you go to the problem of statement, so Homa Bay County faces at least 18 billion funding gap. Dependence on transfers and weak governance impede fiscal impedance. No president or investor confidence exists in county bond markets. The study assesses feasibility, risks, and enabling conditions for issuance. So as we all know that it's only the national government at the moment that is able to issue this kind of bonds, and for this to maybe to also be available to the county government, I believe that we also still need the policies, because we don't have the constitution policies that can be able to guide for such. Even the CBK doesn't have one. So my research objectives will be as follows: assess the legal and institutional frameworks for bond issuance, evaluate investor perceptions and risk considerations, analyze governance efforts on investor confidence, and also examine the technological role in the transparency, develop a predictive model linking governance, technology, confidence, and feasibility. So we'll go to conceptual framework. So my independent variables will be the governance, technology, and the legal or institutional frameworks. So the mediator here will be the investor confidence, and the dependent variables will be the feasibility of the county bond issuance. So here it's just the relationship between the governance, confidence, and feasibility, and technology and confidence. So if we go to the research methodology, So
We have lost
the
you.
population. Sorry.
Continue.
Okay, so if we go to the research methodology, we'll look into the sample population, the methods of data collection, and also the analysis that will be involved in this. So for my case, I'll start with my research, the research philosophy approach, of which the study will adopt positivist philosophy and deductive approach to test theoretical and relationships empirically. So for the research design, a mixed method design which integrates quantitative surveys with qualitative interviews for triangulations. So when we go to the population and sampling, the population will include the institutional investors, i.e. the banks, pension funds, insurance, and also circles included. We will also have the retail investors, and also will include the county officials and the regulators like CBK, CMA, and the National Treasury. So sampling method, a stratified random sampling approach will be used. And when it comes to data collection instruments, a structured questionnaires and interviews, which will guide the data collection, and will also undergo the expert validation for content and accuracy, reliability. So when it comes to data analysis, for quantitative data, we'll use the SPSS software, so that we can get the smart PLS for descriptive correlation and regression analysis. So for qualitative one, I'll use the NVIVO for thematic coding. Integration of results will occur at interpretation stage. So I think that's it. So also closing on that with the ethical considerations. With ethical considerations, I'll encourage responsible borrowing and fiscal accountability. Also, guidelines from policymakers on credit evaluation and governance framework. And that's my presentation. Thank you. Any question or clarification? Any?
Thank you, Migot, for that nice presentation. But because of time, I'm going to give you a personalized response to your work. So you may drop your presentation. So nani ako tayari mwingine? Let us get the next presenter very fast, whoever is ready. So the next person on the screen is Faith. Faith, you said you're not ready?
I was requesting if I'm away from somewhere I can project. If you can be able to project for me, and submitted it. I'll take, please. Kind request.
Faith got key, right?
Yes.
Okay. You can see it, Faith?
Yeah, but you've not opened. No, it's not in the screen.
Okay. What's happening?
It's not among the documents that you've saved on that folder.
There is one here. Okay, fine. That one.
Yeah, that one. Thank you. So my research topic comes from my daily work as a finance person. I happen to sit in the board of a state corporation and happen to be a chairperson of the Finance and Grants and Resource Mobilization Committee. And so, as you had told us, someone to choose a topic based on what they do. So I chose my research topic to be the effects of Treasury budget controls on the financial performance of state corporation, with a specific focus on KRA. The background of my study is that for those that are in public finance know that the management of public finance is under the sole control of Treasury. And Treasury is empowered by both the Constitution and the PFM Act to try and bring fiscal governance in the utilization of public finance. But in doing so, sometimes through other instruments, they over-exercise that control. So my sole purpose of my study is to try and understand how these Treasury controls through various instruments that I've listed in one of the slides, how do they affect the financial performance of the state corporations? And that's my background of the study. And so the slide 4, the rationale of my study, I gave it this rope metaphor that shows on one hand Treasury pulling on one side and the state corporations pulling on the other side. So for me, my study and my research is on the tension of this rope, on how Treasury, through the various controls, can be able to exercise their controls, but still give some autonomy or some freedom to state corporations. And so that gives my problem definition of my study, that the Treasury oversight is constitutionally justified, yet its increasing centralization of budget power has reduced the agility of state corporations. The Kenya Revenue and other state corporations frequently faces delayed disbursement, budget cuts, and rigid ceilings that stall modernization and efficiency. Treasury control is like a rope. One hand secures physical discipline, while on the other hand drives performance, and when pulled too tightly, it restrains innovation and weakens financial outcome, pulled too loosely. So this is what I'm trying to study on how Treasury, using the various control, can, yes, try to balance both sides, give the state corporations their financial freedom in some sort, but still achieve what it's meant and mandated to achieve under the Constitution. So my research objectives, my general objective is to investigate the impact of Treasury budget controls on the financial performance of state corporations in Kenya, with specific focus on KRA. And my specific objectives are 4, to examine the legal and policy framework basis of Treasury budget controls in Kenya, to determine and analyze how the Treasury controls the budget of KRA, to determine how the Treasury budget reductions and disbursement delays will impact the financial performance of KRA, and to recommend ways of creating a balance between fiscal discipline and operational efficiency in state corporations. So the next slide gives my conceptual premise or framework. My independent variables are the Treasury budget controls, the various Treasury budget controls, which are budget ceilings, disbursement schedules, expenditure restrictions, remittance directives, and procurement and project approvals. The moderating variables are MTEF, which stands for the medium-term expenditure framework, which guides resource allocation and ceilings and links physical control to performance goals. My dependent variables are the financial performance of KRA, which I'll pick indicators of revenue performance, operation efficiency, budget appropriation rate, rate on investment, and service delivery efficiency. The next slide also talks about, it's just an explanation of my conceptual framework and the legal framework of treasury control, which is based on Article 225 of the Constitution and the PFM Act. The other slide, I've given in my presentation the various treasury mechanisms of, yes, that slide is conceptual framework, a continuation or a further explanation of what I've presented earlier. And the next slide is the legal framework of the treasury control, where treasury drives its mandate to control the state corporation. Is based from Article 225 of the Constitution and the PFM Act, which has mandated them to control the budget or the spending of the state corporations. I've also, in the next slide, given the various treasury directives since 2023, and these are the instruments that I'll be using to try and see how they have affected the financial performance and the operation efficiency of the state corporations. That is a background of MTEF. What is MTEF? The Medium-Term Expenditure Framework. Mwalimu, because of time, should I go talk about MTEF?
Let us go to the methodology, chapter 3.
Okay. It's in, I think, slide 17. Yeah, my research design, the study will use a descriptive and a correlation design to examine links between treasury budget controls and the financial performance of KRA. My target population, the sample include treasury budget officers, KRA finance managers, and departmental ends involved in budgeting and planning. I intend to use both primary data and secondary data. Primary data, which I'll use questionnaires and key informant interviews. Secondary data, I'll use the KRA financial audit. On data analysis, I'll use the SPSS with descriptive statistics and regression for quantitative data and thematic analysis for qualitative insights. My last slide is on the key findings that I expect is to try to find how Treasury should find a balance between physical discipline and the autonomy or the freedom of the state corporations. And with that, I submit.
Thank you, Faith. Thank you, Faith, for that presentation. As for Migot, I think I'll be able to give you personalized feedback later on. Thank you. Ian? Ian Gitari, you can.
Yes, Daktari. Today I have some issue with the power connection. So I'm trying to get a place where I can get some power so that I can be able now to present my proposal.
Veronica Modoni.
Mwalimu, I also request if you can put my screen up kindly. I had shared with you.
Let me see. Veronica, can you see it?
It's not. No, it's not up, Mwalimu.
Okay. And now is it up?
Not
Veronica?
yet.
Not yet.
Yes, not yet, Mwalimu.
Okay. How can I get this thing? Yeah. It should be applied.
Yes, it is. My project goes around the impacts of financial literacy on debt management for salaried workers in Embu County, that is in Kenya. I was motivated to do this project because that's my field of work. And I could see the challenges that the salaried workers go through because of poor debt management, lack of knowledge in understanding how the loans are calculated and the interest rates. The background of this is now the challenges related to the financial management. Despite these people having consistent income, the salaried people continue to struggle in debt. That is increased loans, default, and multiple borrowing. And then the problem statement, I came up with the 4 problems that need solution. That is, the salaried employees of Embu County are finding themselves in financial distress despite receiving a regular salary. So out of the observation, the following came up, that is multiple loans, that is in SACCOs, mobile, the digital ones, and also in banks. Excessive debt to income levels that exceed recommended values. And this one you calculate by getting the expenses over the gross income. If it's above 36%, it should be less than 36% for debt to income levels. The low awareness of repayment of loans and how interest are calculated. And the other one is the increased cases of loan defaults. We've seen so many being blacklisted, and auctioneers and majority being followed up by auctioneers due to failure of payment. The study questions, I came up with 4 study questions, and one of them is what is the financial literacy among salaried employees in Embu County? What debt management habits and trends predominate among the salaried employees in the county? The other one is how different dimensions of financial literacy are associated with efficient debt management. And the last one was what demographic factors, that is age, income levels, and education, would they influence or will they be a link between financial literacy and debt management outcomes? For my research objectives, the general objective is to assess the impact of financial literacy on debt management practices among salaried employees of Embu County. And for my specific objective, one is to examine the financial literacy rate of the salaried employees of Embu County in key areas. Those are my independent variables, that is budgeting, saving, investment, and debt management. The other one is to investigate the debt management behavior and practices among Embu County salaried employees. The other one is to determine the relationship between financial literacy element and the corresponding debt management outcomes, and to identify demographic and socioeconomic factors that mediate the relationship between financial literacy and debt management in Embu County. We jump to the hypothesis. We go to methodology for research. So the research design will be mixed method design, encompassing a cross-sectional survey and focused group discussions. The study area is Embu County, with focus on major urban areas such as Embu Town, Runyenjes, and Siakago, and also attendant employment centers. My target population is 5,000 salaried employees, that is in county government, TSC, health sectors, and also informal private sectors in Embu County. The sampling technique will be stratified random sampling based on employment sector, e.g. county government, national government, or private sector. The income brackets, the geographical distribution in the county. My data collection method will be structured questionnaires, demographic section, scale of debt management practices, inventory of financial attitudes and behaviors, focused group discussions, that is FGDs, consisting of 8 to 10 members each to discuss contextual consideration and day-to-day life. Key information interviews, that one I would get from maybe SACCO managers, bank, from credit officers, or human resource managers. Data analysis will be quantitative. In quantitative, it will be descriptive statistics, correlation analysis, multiple regression analysis through SPSS. For qualitative, it will be through thematic analysis of FGDs and key informant interview data. For the project timeline, I've given some timeline there up to when my report will be concluded. I've also done the budget estimates. It will cost me 86,000. That is having printing of questionnaires, research assistance, transports and logistics, and also paying the people who will be carrying out the data. For my conceptual framework, I skipped it in the slides. So independent variable will be the financial literacy, with the components being budgeting skills, investments, debt management knowledge, and savings. For the dependent variable, it's effective debt management with the observed outcome, optimal debt levels, and reduced financial distress. My moderating variables will be demographic factors such as age, income, and education. The other one is access to formal financial institutions, and also the peer influence and social norms. The expected outcomes will be in-depth evaluation of financial literacy levels among Embu County salaried workers, identification of particular debt management issues and trends, evidence-based explanation of the relationship between financial literacy and debt management. And finally, the contextualized insight into moderating factors in Embu County. So briefly, that is my proposal. Back to you, Mwalimu.
Thank you, Veronica, for that. So I'll also give you the feedback later on.
All right.
Elizabeth? Okay. Elizabeth, are you ready? Caroline?
Hello, daktari. Hello, daktari. Okay.
Good evening.
Good evening. Proceed, Caroline.
Okay. I hope it's clear to everyone. Everyone can see what I'm presenting. So my proposal is on the effect of mobile banking efficiency on member savings behavior in SACCOs in Meru County. But the reason I chose that topic, it's because mobile banking has become central to SACCO operations, yet savings growth remains inconsistent. So I want to understand whether efficiency, that is through the speed and the cost reliability, how it affects member savings behavior. So SACCOs in Kenya are increasingly adopting mobile banking platforms to improve service delivery. Efficiency in mobile banking, that is through speed, cost, reliability, and accessibility, affects how members save. Despite adoption, many SACCOs in Meru still face low and inconsistent savings. The study aims to establish whether mobile banking efficiency enhances member savings behavior, SACCOs sustainability. My research problem is despite mobile banking adoption, savings growth in SACCOs remains below expectations. Some members still prefer manual deposit due to reliability and cost concern. The research question is, how does mobile banking efficiency affect members' savings behavior in SACCOs in Meru County? Objectives, the general objective is to determine the effect of mobile banking efficiency on member savings behavior in SACCOs in Meru County. The specific objective is to examine the speed of transactions, how fast they reflect, the reliability of the system, uptime, and that is if there are errors that occur. Also, there is the cost, that is the transaction fees. Also, accessibility, that is availability of services anytime the members want. Also, the hypothesis, the null hypothesis is that each efficiency factor has no significant effect on savings behavior, and the study will test whether that is true. Literature review and knowledge gap. That is the past studies that were done. That is by Kamau, examined mobile banking adoption and SACCO's performance. Also, few focused on efficiency indicators. That is the speed, the cost and reliability, and individual savings behavior. Existing studies emphasize technology adoption, not behavioral impact. This study bridges the gap in the SACCO context in Meru County. The methodology, that is the design to be used is descriptive and correlational research design. That is to describe the current situation in SACCOs and finding out whether a relationship exists between mobile banking efficiency and the savings behavior without manipulating any variables. Also, my population will be SACCO members in Meru County. The sampling will be stratified random sampling, whereby it ensures fair representation of different SACCOs and avoids bias across rural and urban areas. Data collection that will be done through structuring the questionnaires, that is to the members. Analysis will be descriptive analysis, statistics and regression using SPSS. My work plan summary will be proposal, or it will literally take 3 to 4 months. Estimated budget is around 10,000. I might have skipped some slides, but Daktari will guide me on that. Thank you.
So thank you for that, Caroline. The nice presentation. So again, as a less, we'll be able to give you feedback later on. Jonathan,
Hello, Doctor.
Yes, go on.
Maybe you can power for me. I have an issue with my laptop.
Okay, then just present. Okay. Let me know when you can see it.
Yes, it's okay. It's up, Mwalimu.
Okay, fine. Proceed.
So my research proposal is based on the impact of fintech innovations on banking sector profitability. I will do this research from Tharaka Nithi County, and the reason as to why I decided to come up with this research is because first I'm in the industry, and over time we have witnessed banking sector has undergone significant transformation due to rapid rise on financial technology, that is innovations. And this includes mobile banking, peer-to-peer lending, blockchain, artificial intelligence, and big data analysis. So again, my motivation of doing this research again is based on need to come up with actionable insight for stakeholders in the banking industry, because fintech continues to reshape the financial landscape. Therefore, understanding the impact of profitability then will help the institution to come up with regulatory policies, investment choices, and also come up with strategic decisions that will help the institutions now to increase their profitability. Therefore, the research will aim at, filling the existing gaps in academic literature, providing empirical evidence that is rooted now on real-world data. Because many researches have been done, but the researches that have been done, most of them were done before now. FinTech were regulated by central bank. So this one motivated me to do this research. Then I will go to research objectives. The general objective will be to examine the impact of FinTech innovations on profitability of banking institutions. The specific objective will be to identify the type of FinTech innovations that has been adopted by banks over time. Then I'll also be able to analyze the relationship between FinTech adoptions and profitability metrics. And I'll also be checking on the moderating effects of regulatory environment on these relationships. And I will also, again, be checking, or rather be determining the influence of bank size, operational efficiency, and market competitions as a moderating variables. Then I will also be aiming at building conceptual framework, illustrating the relationship between FinTech innovations and also bank profitability. I'll go to conceptual framework, and my independent variables will be now the FinTech innovations. Dependent variables will be bank profitability, that is return on asset and also return on equity. I love 4 moderating variables, that is regulatory environment, bank size, operational efficiency, and market, sorry for that, and market competition. Then I have a moderating variables, just a few contributors to bank profitability, just trying to illustrate how the profitability of banks is determined by various variables. Then I also go to the research methodology that I'll use. So I'll use quantitative and correlational research design, just to determine the relationship between FinTech adoption and bank profitability. Then population and sampling. I'll use commercial banks operating within Tharaka Nithi. Then sampling frame, I will also select licensed commercial banks. Then sample size, I will be determined by, sorry, Mwalimu for that. That is the sample size will be determined by a cohesion formula, which will be targeting 95% confidence level, just to account for the total population size. Then sampling technique, I'll use stratified random sampling to ensure representation across different banks. That is Tier 1, Tier 2, and Tier 3 banks which are operating within the county. Research methodology, again, continuation, I'll use data collection methods. I'll use 2 methods, that is primary data, the structured questionnaire, which will be directed to bank managers, especially the ones who are responsible for FinTech adoptions. Then the secondary data collection, I will use the financial reports, annual statements, FinTech adoption indices over the past 3 years. In terms of measurement, I will, for FinTech innovations, a number of type of FinTech solutions adopted, measured through FinTech adoption scales. Then profitability metrics, that is, I'll use that is RO and RE, that is return on asset, return on equity derived from financial statements. Moderating variables, that is, I'll use regulatory indices, bank size, operational efficiency, and market concentration. Data, in terms of data analysis, I'll use regression models, that is a multiple linear regression to analyze the impact of FinTech on profitability. Then on a modulation analysis, that is the interaction terms within regression model, just to test moderating effects. Software, I'll use SSP, that is SPSS, Stata, or RStudio for statistical analysis. Then on ethical considerations, just to ensure that I will ensure that is, sorry for that. confidentiality of bank data that I will get. Then there will also be voluntary participation of respondents, ethical approval from relevant bodies. Then there is also expected contribution and limitations of the study. So the expectations will be to come up with the empirical evidence on fintech's influence on bank profitability. Then there is also policy implementation application for regulators and bank management. There will also be strategic insight for banks seeking competition and competitive advantage through fintech. The limitations, there is data availability and accuracy. There is also consistent technology changes which may affect the stability of the findings. And there is also generalizability because of the limited region, that is Tharaka Nithi County. I may not be able to go outside Tharaka Nithi to do this research. Then there is work plan there, well indicated. And then there is also the budget that I will be able to use that will cost me around 90,500. Thank you, Mwalimu.
So thank you, Jonathan. Thank you, Jonathan, for that presentation. So I think right now it's at the top of the hour. So I know most of us, if not all of us, we might be engaged in other activities, especially at the top of there. So I want us to stop there, unless my class rep direct me otherwise, so that we can continue with this discussion in our next class. So we may be forced to have 2 classes. Okay, although we still have time. Yeah, but one thing I can comment is that I'm really impressed by the way most of us are able to work aloud the presentation and the proposal. The confidence are at the best. The know-how on the work is at the best. So with a little guidance, I'm very sure the presentation can be amazing. And then the other thing that we need to be keen on, although at this level, I mean at this time of presentation, I'm not really keen on it. This is a plagiarism. It should be below, I think, 15%. So so that you don't present an exciting proposal, but it is copied from someone's work. So Veronica, what do you have to guide us on?
Mwalimu, I think it's fair enough. We can stop there. We still have more than like 9 who have not presented. So they will do it during our next lesson.
Okay, so from my side, it's a good night, and thank you all of us for your patience and good job. Keep it up.
Thank you, and a good night.
Okay.
Thank you.
So we can have a class at that time. Thank you. Asanteni sana.